When you invest in stocks, one of the most important metrics to look at or analyze is the enterprise value. In this video, I'm gonna share with you everything that you need to know about this very important metric, including what it is, how you can calculate it, and most importantly, how you can use it to your advantage to make good investment decisions. And if you stay until the end of the video, I'm gonna give you some pro tips so that you can get automatically this value on your Excel or Google Sheets spreadsheet. Okay, so before we get into how you can calculate the enterprise value for stocks, I just want to walk you a little bit through what the enterprise value is and then show you the specific formula that you need to use to calculate this important value. Okay, so first of all, the enterprise value formula is very important because it allows you to get a really good idea of the overall value that you're getting for a particular company. The way to think about it is when you invest in a company, it's basically as if you were to buy the whole company in a way, except you're only buying a percentage of that company. So when you buy a company, you get access to the company's assets as well as you get access to the company's balance sheet. So let me just walk you through that. So for example, let's say that we're looking at Apple. And in this case, I'm going to use Y-Sheets to get the financials for this particular company. Click on Get Data. And so when you invest in Apple, or if you were to think about buying Apple, which obviously is not possible, what would happen is that you would get access to the balance sheet. So the assets that the company owns, you would now have control over. Same with the liabilities. Now you would be responsible for the liabilities that the company owns. So in order to determine the price that you're paying for that particular company, you have to take those factors into account, and that's where the enterprise value formula becomes really helpful. As you can see, the enterprise value formula is very simple. What you need to do is take the market capitalization, and the market capitalization is essentially the price that you're paying for that particular company. It is calculated by taking the current price of a particular stock and multiplying that by the number of shares outstanding. After that, you add the market value of debt, because like I mentioned before, the debt is something that now you're gonna inherit when you invest in a particular company, so you have to take that into consideration. And the last part is that you need to subtract the cash and the cash equivalents, because when you buy the company, now you have access to the cash. So therefore, this sort of acts as a discount in terms of the price that you pay for that particular company. So altogether, amongst many ways to analyze the value of a company, the enterprise value is used to compare what the current enterprise value is of a particular company versus what you think the company is worth. This allows you to see the difference between the two numbers and allow you to determine whether or not you're making a good investment. So now what we're gonna do is I'm gonna walk you practically through how it is that you can calculate the enterprise value for Apple. So in order to calculate this important value, we're gonna be using this formula right here. So let's get the data based on the different components of the formula. First, what we're gonna get actually is the market value of the debt and the cash equivalents. This is information that you can easily find on the company's balance sheet, and here you can see with Y-Sheets you get it on a historical basis, so that way you could calculate this number historically as well. And now what we're gonna do is we're gonna get the debt. So there's different ways in which you can get the debt value for the enterprise value. The one that I'm gonna show you, and the most practical one, is to take the total debt. So locally here, the total debt is already reported. This again comes from Y-Sheets, but you can also get it from the company's annual reports. So here's the value historically, and we're gonna calculate our enterprise value here. So we're gonna do an enterprise value. We're gonna bold this, zoom in, and now what we're gonna do is this. We're gonna take the total debt, and we need to subtract what? We need to subtract the cash and equivalents, which is great. So now we do that. And now what we're missing is the part before this, which is the market cap of the company. So there's different ways of calculating the enterprise value formula. Like there's different periods that you can use. So in this case, if we want to calculate it on a historical basis, we need the historical market cap when Apple released these financial statements. Using Y-Sheets, you can get it right here on the key metrics. You can see the market cap. So we're going to select this number, and now we can just click enter and here is the enterprise value for Apple, in this case for this particular year, which is 2022. Now what we could also do is to continue to drag the formula and get the value on a historical basis, but I just want to show you how it works. So we take the market capitalization, we add the debt, and then we subtract B7, which is the cash and cash equivalents. So this results in the enterprise value of the company. And if we drag the function like this, we could calculate it on a historical basis. Let's just verify this information. So we're getting the right numbers here. We're taking the total debt. That's great. Now the only thing we need to verify is the fact that we should want C15 here, which if we look here, C15, there you go. It's taking the right market cap, which is the market cap when the financial statements were released to the SEC. If we go back to the number in the same way that we calculate this on a historical annual basis, we could do the same process on a quarterly basis. For that, once again, you can use a tool like Y-Sheets or any other tool to give you financial data. You're gonna enter the ticker and then you're gonna select Apple, except this time you're gonna select quarterly data and then you're gonna repeat the process that I just showed you before. Once you do that, you're gonna have the enterprise value. But now what I wanna share with you is the fact that instead of calculating this number manually for every company that you analyze, I want to show you that with Y-Sheets right here, the cool thing is that on a historical basis, annually and quarterly, you can also see the enterprise value right here. So if I zoom in, you can see right here on this column how we have the enterprise value automatically calculated for us on a historical basis. And the cool thing is that you can access this information on its own rather than getting everything at once, and I'm going to show you how to do that so that you can compare companies more easily across their enterprise value and find the stocks and the particular companies that best fit your particular investment criteria. So here we have a whole bunch of companies in the same industry, which in this case is pharmaceuticals, and what we're going to do is we're going to calculate or get the enterprise value automatically for each of these companies. So there's different ways in which you could do it. First, what we need to do is we already have the symbols of the companies. So now what we're gonna do is we're gonna add the enterprise value. So in this case, we just enter enterprise value. And this, it's very simple to remember because it's exactly the same name as you can find on the key metrics. And also, if you want to know what other data is available that you can get through Y-Sheets, that's also accessible right here, available data. And then after you do that, what you can do is use the WISE function. And the cool thing about this is that it's very simple to use. So you enter the symbol. Now it's asking you for the parameters or the parameter, which in this case is enterprise value. And in this case, we're going to calculate this for 2021 as an example. Once we do that, all we need to do is lock in the cells, and you'll see why in a second. So I'm going to do this, get rid of the decimals, and now we can just simply double click or drag this formula down. And now what's going to happen is that automatically you're going to get the enterprise value for all these companies in 2021, which is great. And so now we can go ahead and start to do some different comparisons and analysis to find valuable companies to invest in. Before we get into that though, I want to show you how it is that you can get the enterprise value at the real time. So not on a historical basis like we're doing right now, but right now based on the current market cap and the latest debt and cash numbers. So in order to do that, it's very simple. We're going to get rid of these formulas right here. And what we're going to do is we're going to go back, enter the WISE formula. And the only difference here is we're going to enter the same symbol, same here, lock in the cell, is instead of having a specific year, we're going to enter TTM as the period. TTM means the trailing 12 months. So this is going to give you the latest value, the latest market cap, the latest cash, the latest debt value, so that you can compare these companies in real time. Once you do that, then you can just double click here and now you'll have all the data. And the cool thing about this is that with Y-Sheets, anytime you can refresh live data and all of the data will refresh for you, which is great. So as the market cap changes, then this number will also change. And now what we're gonna do is we're gonna get into comparing this number with the market cap of this particular companies so that we can start identifying some valuable potential investment opportunity. To get the market cap is very simple. I'm just gonna copy paste this so we have the same formatting, and then I'm gonna enter market cap. and this is going to allow you to get the market cap for all these different companies. We're just going to expand this, and now instead of the WISE function, I'm going to use the WISE price because this provides you with pricing data. So we're going to select symbols. In this case, we're going to select all of this. And what's the parameter that we're looking for? Well, if we scroll up, it's the market cap. So once we have that, we can get the number, and now all we need to do is format this, get rid of the extra decimals as well, and anytime we want, again, we can refresh the live data so we can have the latest numbers. And now what we could do is we can start comparing these two numbers to see like what's the difference in the different values. One last pro tip that I want to share with you is how it is that you can guess enterprise value multiples for multiple stocks. So the way that you do this is very simple. All you need to do again is to use the WISE function. We're gonna enter the symbol, and in this case we can enter multiple parameters. So this is the data that we're gonna get, and it's super helpful, and then I'm gonna show you why this data is helpful to be able to compare across different companies. So we have the enterprise value over EBITDA, the EV, which is the enterprise value, to operating cash flow, and then here to free cash flow. So we're gonna select this data, and now for the periods we're gonna use TTM again. So this is the latest data. We're gonna click enter, and now all we need to do is make sure to lock in the proper cells so that we have those cells and get that data for all the different companies. And now what I'm gonna do is format this properly, and there we go. Now what we could do is simply go here, drag this down for all the different companies that we're analyzing, and then if you want you can just change the formatting so everything looks nice. And once you're done, you will have all the data right here that's gonna allow you to make good investment decisions. So let me explain that. With these multiples that we just learned how to get from WISE sheets, and this by the way applies in Excel and Google Sheets, is exactly the same method. What you could do is to figure out how much of the enterprise value you're paying relative to the EBITDA. So in this case, the answer we can see for this company is 15.30. That means that right now the enterprise value is 15 times 0.30 times the EBITDA of the company. So that's what the enterprise value is. What that allows you to do is to look at all these different companies, and then ideally what you're looking for are those companies that have lower multiples, because that means that you're paying a lower enterprise value for that particular company. So that would mean that you're paying less money for that company. So for example, in this case, the enterprise value over EBITDA says 6.55. So that means that you're roughly paying 6.5 times the EBITDA, which is much better than to pay 15 times. Now, the one thing that you do need to remember is that sometimes the better companies do have a higher price, and that makes sense because they have less risk involved. However, this is just something for you to keep in mind, and then when you do your analysis and you spot a potential investment opportunity, like for example, let's say this company catches your attention, then you can go ahead, do some more research and ensure that this is not just because the company has a lot of risk involved, but maybe because some other factors that you can use to your advantage so that you can reap the benefits over the long run. Now, the last thing that I want to share with you is that the same concept applies to all this, to these two metrics right here. So in this case, this is the enterprise value over the operating cash flow. So that means in this case, you're paying 18 times 0.28 times the operating cash flow, and that's the enterprise value. In this case, this would be the exact same thing, except as the free cash flow. So in this case, you're paying 20 times the free cash flow of the company as the enterprise value. Now you know everything that you do need to know about the enterprise value, so be sure to use this knowledge so you can go ahead and crush it in the stock market. If you've enjoyed this video, make sure to subscribe and turn on the notifications on so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level. I'll see you in the next one.